Bootcamp Day 3. So here are the topics: daily bias, composition profile, VWAP, balance vs swing important levels, long-term versus short-term auction, band squeeze, compression area, battle of orders, retreat zone, passover zone, and lastly, stair model and gap model. Alright, how do we find daily bias? Super simple. We just try to look at the value areas. You try to track them and see if we shift lower or higher. If we shift higher, we are bullish. If we shift lower, we are bearish. If we start from this value area, next day we shifted higher, which means that the buyers are in control. The day after that, overlapping day. Since these two are colliding with each other and they're overlapping, this is a neutral day. And then you just want to merge them to get the overall view of this profile. And then you just continue. And as you can see, the next day, value was higher. So we're bullish. And we can keep looking at it like this. Shifted higher, bullish. Overlapping, merge them. Next day, bullish. Overlapping, merge them. Basically, this is it. You just watch how we shift higher and higher based on the value area. And these are daily volume profiles. And it's also to mention, it's on cash sessions, so regular trading hours. Okay, and check this out now. Here, we see that we are still bullish because we shifted higher. Here, we shifted lower, so it indicates that the sellers are now stepping in. But long term, we are bullish. So all these legs up. So one shift lower doesn't mean we are bearish directly. It could mean that it's just a retracement. And as you see, the next day after that, we shifted higher, bullish. The day after that, we shifted lower, bearish. One thing to note is that we rejected the value area high 2 times. On this day and on this day. So if you look at it like this, it looks like it's a ping pong game. We're just chopping. So most likely just a consolidation area. And since they're overlapping each other quite a lot, let's just merge them. Here, we get that clear shift lower. But if you're still unsure, if we are really bearish now, you can wait one more day to confirm it. And the day after, confirmed it. We have shifted lower, so we are bearish. The day after that, still bearish. The day after that, still bearish. This is where you can take some trades. So this is value area high. The day came up, touched it, rejected. Same as here. The day came up, value area high, rejected, went lower. And this is how you find your daily buy. Follow the value. And you see it through daily volume profiles. Now, composition profile. If you look at the right side, this is the composition profile. Basically a long term. It's based on 3 months of data. So it's a long term volume profile, where you can see the overall view of the auction. And I'm going to show you why it's important. So if we reset everything and let's turn off the composition profile, we saw that the value kept shifting higher and higher. And then we came up into this zone. And then we saw for the first time sellers trying to shift the value lower. And if you look at this zone, we rejected it 3 times now. This zone. Now look what happens when I turn on the composition profile. I'm going to show you that this was predictable. At the time, I think value area was around here. So in other words, we were in value area high. We were where it's expensive for buyers and where we most likely will see sellers step in. So with this profile, it makes sense that sellers started to protect the zone and start entering the market. So sellers came in here, pushed price down. And why I said you can wait till we get a clear direction is because on this day, it wasn't clear that we wanted to go back into the value area. But on this day, it was super clear. So the auction has changed. And now the other thing is, since we knew that we accepted price back into value area on the composition profile, we knew where the target would be. And if you watch my previous video, you know that there is only one thing that acts like a magnet in this market. And it's the point of control. And look where price came. Today, we managed to come down to the point of control. So this was the aim pretty much the whole week. That's how I want you to frame stuff. And if we look here, if we now keep coming lower and we start accepting price below the value area low, then you can expect buyers to start stepping in. And that's it. And one more thing, you may wonder how to take trades based on this. Well, pretty simple. If we know that we are bullish, you can mark out yesterday's value area high and also yesterday's point of control. And you can also mark out value area low. Here you got 3 opportunities. These 2 are the higher chance of succeeding in finding buyers. And these levels are static, so they won't change. However, I want you to keep in mind, say that you mark this day out and you then wait for market to open. Since this is cash session, meaning it's only plotting what happens during New York, it can happen that price will do this move, this touch, instead on London session. Say that during London session, we tapped into your we tapped into your zone, and we got the reaction from it. Then on New York Open, we might just explode up directly. So keep an eye on London and see if we tapped into your zone or not. Because if we did, prepare yourself to just jump on the train as soon as market opens. That's it. Next thing, VWAP. VWAP is the dynamic value of the market, the rhythm of the market. It means it's quite easy to see who is controlling the market based on if we're above it or below it. If we're above it, it indicates that buyers have control. If we are below it, bears have control. This is an institutional reference point, and it's a dynamic value. So it's a point where institutions reload their position. It makes sense for them to enter on this of the VWAP. So if price would come up to VWAP, you could take a trade if it aligns with your model, of course. Okay, next thing, balance versus swings important level. I've noticed something that Fabio does a lot, quite understandable now. If you look at this balance one, he only marks out, say, for buyers, the levels outside the value area because we want to play the range, right? This high buy aggression and this sell aggression because they are outside of the value area. But when it comes to a swing, so if we take this swing, it is fine to mark out this point, even though it's included in the value area, because now it's not a balanced area that we're trying to trade off. We're trying to trade off a swing. So we're trying to find just important levels along the swing. So for example, here, this is the most significant zone. So that's the difference. In a balanced area, you mark the delta levels outside the value area because we're trying to fade the lows and fade the highs. Whilst in a swing, you want to enter where most aggression was, and that could be inside the value area. So from my understanding, this is the way to do it. Next thing, long-term versus short-term auction. So for example, if we look at the auction here, we know that the long-term auction was short after we accepted lower here. So you can either play it safe and just try to take shorts along the way, like here, or you can try to catch those retracement moves that will test these zones. But keep in mind, if the long-term auction is short, I would advise you to just try to find entries in the direction of the long-term auction. It's less risk of you losing. All right, now we have band squeeze in the compression area. So if you can recall something from my previous video, which is about battle of orders. In the market, we have a battle of orders. So either buyers are pushing or sellers are pushing. And what always happens is that they have a battle between zones. So say that the buyers are defending this zone and sellers are defending this zone. Price will just chop it between these zones and they are fighting it out. And what you have to keep in mind is this zone will shrink and become smaller and more compressed. Now it will be like this. It will chop between this zone until one side eventually wins and pushes below, and you can then expect a squeeze because we accumulated a lot of orders here. Now the thing I want you to take from this is that don't interact in the middle. If you see a battle like this, we have aggressive sellers at the top, aggressive buyers at the bottom. You can take a trade on these sides if you see this battle clearly, where you aim up and down and just playing the range, or instead wait till one side breaks through aggressively and shows you who won the battle, and then you can take a trade in that direction because then you can expect a squeeze. So if you heard about the term don't diddle in the middle, that's what I'm trying to say. Don't take trades in this zone. Instead, try to fade the lows and the highs, or just wait for the battle to end by having one side show that they won. Now, battle of orders, retreat zones, and passover zone. This is super important. If you watch my previous video, if you remember what we looked on, it was something like this. We had marked out a zone up here. Price had to fight its way up here. And then we looked to take a short. If you remember, we had this battle of orders down here between sellers and buyers. And buyers won. So this is the last zone where buyers had control. And in case they lost control here and lost the fight in this zone, the retreat zone is where they most recently had control, which was down here at this level. And that's exactly where price later went. So if they lose a fight up here, then you can expect a revisit to their zone where they had control. Now here comes another thing. Say that buyers now push the price up again. This zone where they recently lost the battle is called the passover. if we manage to break through it and accept above, then you can expect a squeeze. Sellers won the fight. Obviously, we have some big sellers that push price lower. And if they come back into the zone and manage to break through, all of these sellers will then have to cover themselves. And then you can expect a big squeeze up. All right. And last two things, stair model and gap model. Stair model is pretty simple. If price breaks above and we have big order here, you can take an entry if we retouch this big order and push up. Same if here. This is the stair model. You see a big order, take an entry there, aim higher. Like I said before, how much you want to risk is up to you. You can put your stop loss below here, you can put your stop loss below here, or you can be more aggressive, just directly under it if we got a reaction. That's the stair model. And then we have the gap model. If you know what market makers is and how they function, then you will understand why this model works. If you don't know it, I advise you to search it up. So what market makers are doing, the ones that provide liquidity, or the ones that don't care about knowing why it works, it's this. Say we explode above and we start squeezing and we find momentum. Price might open up here, and then what we have formed is a gap right below it. But this gap gets filled in like a second, like it's super fast. So what price does is this. It fills it and then goes up. So according to statistics, there's a high chance that usually the gaps get you in continuation in the direction of which it got created. So if it gets recovered, there's a huge chance that we will continue in the direction from which it came from. Because in short, gaps are like imbalances, and market hates imbalances and it wants to rebalance them quickly and continue. There's your other model. And I know this is in hindsight, but bear with me. So when you see all of this momentum going lower and lower and lower, if you see something like this is something I'm going to try to do. I'm going to try to hover a stop limit as soon as price opens up and I see a gap, a stop limit on the open price point. So as soon as price refills the gap and continues, it would take me with it. And as you can see, we got them all over the place. It's a huge chance that we continue in the direction after filling the gap. All right, that's it. This was for day 3. See you on the next one. Ciao.